Hello my people, hello the Heistmasters. Welcome to today's video whereby we'll be talking more on a price action. But before we can jump into the video, I just want to thank you the Heistmasters for the reactions we got from the last week's video whereby we talked about the liquidity concepts whereby we were able to analyze the market trading on liquidity. Now today's video gonna be hotter than lava. Remember, this is the Heistfx Academy and you are doing us injustice by not subscribing. So as we are doing this intro, take this time to hit on the notification bell so that you can be notified every time that we are about to drop another amazing video like this one. Yeah, now this is the power of the Heistmastersfx Academy and the Heistfx community as large. Okay, now people, straight into the charts without wasting much time. And remember, this is the 1st of December, so we have like 30 days until this month or this year is over. So I don't want to waste anybody's time but to quickly go to today's topic of our discussion, and of these minutes our user in this introduction you have already subscribed and we are good to go. Okay, now what is the price action? So price action is a commonly used name when it comes to forex trading, or each and every person can say I analyze the market based on price action, or I usually analyze the charts using price action, or anything about the price action. So basically we want to break it down before me can go to the charts. And there is Heistmasters, so sorry for ambushing you this day. Remember, now I have a new chart here for the Heistfx Academy. I'm going back to that in a few. Yeah, so basically in other terms, what price action means, it's the pattern of how financial asset price change over time and is a key part of technical analysis in forex. Yeah, me always say the Heistmaster, I'm a technical analyst, so that is why me dealing with the topic of price action is, we always keep it simple, nice and easy, and does not get any much better than whatever we usually do for the thing. You already know. Yeah, so basically the actions of the price. Yeah, what is this price of this market doing? Yeah, now that is what you're going to look at in this particular video. Yeah, so it describes the way a market moves, including its trends and key support and resistance levels. Yeah, now we have gone through the definition of what is price action, and basically it is the actions of the price. Yeah, what is this particular kind of price doing? Yeah, and remember the assets we are going to trade in this financial market I'm talking about, we are going to look at US 30 or US 100, better known as the Nasdaq, and I'm going to teach you on a divergency when you are trading Euro USD and Pound USD, which was one of my favorite pairs to trade. Yeah, so the divergence between the two, so we are going to combine those, and again using price action and timely based trading. Yeah, so you cannot just trade anytime, any of the day. You want to know where are you going to trade, at which time, and on which asset are you going to trade on. Now this brings me to the next phase, whereby I have a small diagram illustrating how the price of the market usually moves by making higher highs and higher lows. Yeah, now as a technical analyst or as a person trading price action in this model, before you can go to the real charts and do a market analysis on now the live charts, in this model, whatever you can see here, we basically have the market making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Yeah. Now, in this own model here, whatever you can see here, let me now go into deeper analysis of whatever we have at this area here. Now, at this area here, now we have a break of structure, which basically we usually refer is as a BOS. Yeah, and then after that a break of structure, the market went on and formed another higher high at this level there. Yeah, now at that area there, we also going to refer it as a break of structure, a BOS. Remember, the market is making higher highs and higher lows, respecting the last or the previous higher low. Yeah, now when it comes that this market is now not able to break past the higher high and now forms what we call a lower high, and then the market now consistently now start respecting that, now that is what we call a change of the trend of the market, basically a change of character or a change of structure. Some of them people can call it a market shift. Yeah. Now from that area there, at this area now where we break below now, for example, if the market was making higher highs and now we have broken below the previous higher low, yeah, now we have shifted from being a bullish market to a bearish market. This is what this model is demonstrating at this area here. Yeah. Now at this particular level, from this area here to here is where we have now that shift of structure, yeah, which I'm going to name it as a change of character there. And now from there, the market now continues making the same models over breaking structures, yeah. Now breaking structures at that area there, yeah. Now this is whatever we can see from this model. From this model, this is whatever we can see here. And again, using this model, we can also see our support and resistance areas in this market. For example, in other terms, you also can see a W pattern here, which most of you people usually refer to as a head and shoulder pattern. This is the left shoulder, head, and the right shoulder. Yeah. So whatever we see here is the actions this particular price is doing. In other terms, price action, thing. Yeah. Now we have a resistance at this area here. Basically, you can see that resistance there where the market is respecting those areas there. And this is the exact model that we want to look at now, straight without wasting much time, to US 100, better known as the Nasdaq, so that you can see the activities over the previous weeks. And remember how we usually start analyzing the market from the bigger time frames, and we are going to start first from let us on today's video start from the daily time frame. Yeah. Now because you have already understood the meaning of a price action, I'm going to quickly delete this definition here so that we can have clean charts. Yeah. So I don't want to have charts which are not clean. And now this is the part where I was telling you, the Heistmasters, that I ambushed you. Remember, we had blue and red charts on the previous week, yeah, but today we have green and white charts. Basically, this goes in respecting our theme color of our logo. So that is why I had to shift this color and modify my charts, and now they are looking amazing. Yeah, does not get any much better than now this theme that we are going to work under the Heistfx Academy. Remember, whenever you say of the word Heistfx and when you see our logo, whatever color comes in your mind is white and green. Yeah, so why not our charts represent the same? That is why I had now come with this amazing theme. Yeah, now what can you see here, the Heistmasters, from the daily time frame? Yeah, now from the daily time frame, the market, let me zoom it so that we can see it from a wider angle. Yeah, as we are coming to whatever we are doing for today. Yeah, now from a bigger perspective of this US 100 from the daily time frames, even if I draw my trend lines here, the market is in a bullish channel, meaning the market is consistently making higher highs and higher lows. Yeah. Now, when the market is consistently making higher highs and higher lows, whatever we want to look at this market is buying opportunities, because already you can see from the trend line part of it, we are in a bullish channel. Yeah, now that is the first thing we can see from the daily time frame. Remember, we are trying to find the daily buyers of this market, so that when we are going now to enter or to start trading this market from the lower time frames, which are the primary drivers of the market, remember the 1 minute and the 30 minutes or the 5 minutes there, you already have your daily buyers. Is this market bullish or bearish? So in this lower time frames, I'll be looking to sell if the market is bearish, or I'll be looking to buy if the market is bullish, because you don't want to catch a falling knife. You already know. Yeah. Now, we have already discussed on the trend of this market from the daily time frames. Yeah. Now, let me quickly go to the 4 hours, where we usually have a deep analysis of these charts before we can quickly go to now Euro USD and GBP USD. Yeah, now from this particular area here, I had already analyzed this market from the previous week, and let me quickly delete all these zones so that I can start a fresh analysis with you people, where we left this analysis from the liquidity concepts for last week. And see, the same liquidity concepts that we talked about, they are also going to play a major role in price action video of today. Yeah, so that is why knowing how to analyze this market with all these ways is going to give you more extra confirmations in this particular market. Yeah, now let us I think last week, let me delete everything to where we had the market from last week. Yeah, the supply, let us remove it. Let us remove everything. Now this is the last place. I think that one was there. Okay, let me just remove it. It was not there. Yeah, now this is where the market was from last week. Yeah, and remember, okay, let me also remove this one. Yeah, now I have deleted everything. Now remember, last week on the liquidity concept video, we ended the week at this particular area here, and this was on Monday. Yeah, now whatever you can see here, let me first have clean charts, and then we can start again all over again with you people. Yeah, okay, now from last week, this is where the market was closed at this particular area here. Yeah, and now on Monday, whatever you can see in this particular market, on Monday the market opened with a vacuum block. Yeah, a vacuum block, or for example just a market gap, which I usually say whenever the market opens with this vacuum block, it means this is an area of inefficiency, and whatever brings about to this vacuum block in the market is when, for example, on Friday the volume is not as much in the market, which leads to now the market was closed at this particular price, for example 1000, and now when the market is opening on Monday, the volume shifts to a different direction, or maybe opens with momentum in the market, and now the market opens at, for example, 1200. Now the difference where the market opened on where the market closed on Friday at 1000 and where the market opened on on Monday at 1200, now the area of inefficiency of about 200 is left in between, and most of the time, before the market can proceed to Tuesday all the way to Friday, most of the time we see the market first comes and fills the areas of inefficiency, and then the market can continue with the right direction. So on Monday, whatever you can see in this particular area there, now let me turn on the session indicator, which usually tells us the sessions that you are trading, for example the London and New York session. Remember, this is a video of price action in relations to time-based trading. We want to trade when there's enough volume in the market, and we are going to utilize it on London and New York session. Yeah, now whatever you can see, when the market opened here on Monday, the market went on and short all the way up there, and now it is from a London session where we had that this big massive rejection candlestick there, which closed as a bearish candlestick with intentions to fill this area or this vacuum block that we have at this particular area there. Yeah, now after, when we see on a New York session, we finally closed at those vacuum block there, and again swept these areas here. Yeah, so this is a 4-hour area there. We took the liquidity of those areas there, and after sweeping those areas there, the market immediately shot up. Yeah, remember, we are in a bullish market. You only want to utilize the buying momentum. Yeah, now that is basically whatever we can see on that particular day. We never had a massive volume on a New York session there, but remember, from our left we had a series of areas in the market where we were looking for liquidity first to be taken in before we can know where we exactly want to take this market trade from. Yeah, now as the market was now going to open on Tuesday here, these were the Asian sessions there. we had the market again leaving this area of that area there as a attraction of liquidity to those areas there. And we can see the market from that area went all the way up. When we go now to the lower time frames, we are going into deeper details. Now, whatever we're trying to do at this area is trying to see whatever the market was doing from this 4 hour before we can go into deep details from the 1 hour or from the 15 minutes and that, yeah, and many other time frames. Yeah, now we did a sweep of liquidity at those areas there. And then what the market did after taking the liquidity from those areas there, the market again shot all the way up there. Yeah, so you can see these massive moves in this particular market are happening in specific times whenever we have the London or the New York. Yeah, but then in between there, the market is consolidating. It is a consolidation market. Here now, when we go to the lower time frames, we are going to understand the importance of when the market is consolidating, and then you are going now to know how now to capitalize on these big massive moves when the market is going now to open, or maybe London open, or during New York open. Because we always say, when you want to attack a dangerous animal, or whenever you want to just attack anything massive, you attack it when it is sleeping. So when the market is closed, for example, on today, we can see the intentions of this market when it is not moving, confusing us. Is this market buying or is this market selling? Yeah. So when the market is sleeping or when the market is in a consolidation, you can have your zones here and here. And this is what exactly I'll be looking for. If the market comes to this zone and gives me a reaction, this is what I want to do from this particular area there. Yeah, now that is why it is important. I have my Asian indicator at this area there, yeah, so that we are going to build a footprint, or we are going to read this price, or what are these actions of this price in this consolidation, so that we can know where do we expect this massive volume to move to in our London or New York window, because those are the only sessions we are going to trade in. Yeah, so we took the liquidity from these lows there, and quickly the market shot all the way up to those areas there, and we don't have much details there. Let us go to the 1 hour and see what the market was doing from the 1 hour there, because now the 1 hour is going to give us much details. Yeah, now this was the vacuum block. The market came and took the liquidity over these lows here, after which we see the market again gave us a reaction from that area there, leaving again areas to be where the market is going to be attracted to, after which we had a break of structure there, and then the market came on New York, took those areas there, and it is from this area here that we see this market came to these lows here. Yeah, now at this particular area here, we have equal lows from this area here, and a solid area where I was looking to take a trade from on this particular day. Yeah, from this particular area there. Now we have equal lows at that area there, and it is a zone of demand. Yeah, in every video that I usually make, I usually tell you on a supply and demand in the market, because you've seen from the left, the market massively reacted from that an area there all the way upwards, and below, above this demand zone there, we have liquidity which has already been taken. Yeah, whenever you have a demand and above it you have an area of liquidity which is going to attract price to those areas there, and now whatever you expect is when the market turns back to that demand area, you wait for a change of character so that you can now catch the massive big move from those areas there. Yeah, now from there, let us go to the 15 minutes. That is whatever you can see from the 1 hour. And now it is in the 15 minutes that we are going now to see the real intentions of this market as we are coming down all the way. Yeah, now from the 15 minutes, remember, we are also doing whatever we usually call top-down analysis. We started from the daily. Whatever we want in this analysis is taking or we are interested in catching one massive buying opportunity, because when the market is buying, we don't want to catch a falling knife. Yeah, it is risky. Yeah, you better wait for the knife maybe to fall down, and then you can pick it easily. Simple, you lift it up instead of risking to catch the knife when it is falling down. Okay, now from those areas there, now straight to the 5 minutes, where now we can see the real intentions of this market. Remember, this was on Monday where the market opened now with this vacuum block here. But then whatever you can see there, this box here marks the Asian ranges. Whatever I was telling you how the market usually consolidates during the Asian ranges. Yeah, now at this particular area here, this is where we have the Asian highs, and this is where we have the Asian lows. And remember, Asian highs and the Asian lows, these are areas of liquidity in the market. Whenever we take the buy side or the sell side of the Asian, we want now to target the opposite direction where this liquidity is. Yeah, now at this Asian lows, we can see a lot of equal lows at that area there, and remember, we have the Asian lows at that particular area there. Yeah, now that is why this area we can consider it as a strong area of liquidity in the market. Yeah, and after which we see the market open with a vacuum block there and shot all the way up. Yeah, and it was on New York where we see this massive supply coming in from the market. Now we are going to mark this area of supply. This was the candlestick which led to a massive supply. And remember, I told you how to identify areas of supply or order blocks in the market. First, that area needs to lead to a valid break of structure and should have candlesticks which are not mitigated. In other terms, inefficiency or areas of an imbalance where the market can come to mitigate and give a reaction from there. Yeah, now from the 5 minutes, that is why I'm going to mark that area which led to this massive supply to take this Asian low liquidity, which was at that area there, as our supply. Yeah, now I'm going to stretch that area there all the way. Where is that candlestick? That massive area there. So I'm going to mark that area as our supply. Let me quickly mark it as our supply. As our supply there. And then after we had that massive supply there, the market closed on that now particular day at these areas here. And remember, now we have this our Asian highs and our Asian lows as always. Yeah, now the market opened on London at this particular day here. And after the market opened at that particular day, whatever you can see here, the market, as the market, during when the market was closed, we see the market took both the Asian highs and the Asian lows. Now we had already swept the liquidity of those areas there, yeah, for these Asian lows and the Asian highs, and we had an area there where the market had printed a low which led to this break of structure from this area there. Now that area can be and also an area in the market whereby we can look up to. Remember, above it we have supply. Now after the market usually moves from demand to supply. Now after the market has come to our supply, we can look to come back to those areas that we have left behind. Now that is why it is important to mark all those areas, all those levels in the market. Yeah, now from there, whatever we have seen in this particular asset here, now this was on the other day where we had these Asian highs and Asian lows. The market quickly took the Asian highs, and now after taking the Asian highs, it is on now London Open where we came and took. We had an area printed here at this, the Asian lows here. We had equal lows where we basically see it as liquidity in the market. That is why we are going to mark it with these dollar signs here. And again, after a while on London, we came and took those liquidity there and again swept below this Asian low liquidity which was left there, and we tapped into our demand area there, and it is from this area here that we saw a reaction from that area there all the way up, and now I think the market came and now targeted the supply. Afterwards on Friday, the market came all the way to this where this massive supply was coming from. Yeah, Now this is whatever has been happening there. Now I had to rush in this today's analysis video because I'll be handling other pairs. Yeah, now I'll be going to GBP USD and I'll show you whatever I was looking at for this week there. Yeah, now this is whatever we have for Nasdaq or US 100. Now when we go to GBP USD, for example, a trade I was taking on a GBP USD there, explaining the same things over price action. Now this one I want us to go to the 15 minutes. Boom. Now from here, whatever you can see, without even taking much of your time, people, whatever you can see here from this 15 minutes, the market at this pound US dollar came to this area here, and after which we had a massive demand in those areas there, which led to a break of structure all the way there, and then now the market was constantly pushing all the way up. Yeah, now whatever you can see, we had equal lows at this area here. We had equal highs at this area here, which I usually see them as a buy side liquidity. Yeah, so those areas I'm going to name them as a buy side liquidity. Yeah, now after those buy side liquidity was taken, let me now go to the 5 minutes. Yeah, because this is basically the trade I was looking for last week. Yeah, now in this area, in this particular area here, remember the market, this is the Asian lows and this is the Asian highs. Yeah, now we see this particular day when London was going to open, we first manipulated the market moving upwards and took the buy side, which was at that particular area there. Remember the market, how we usually have accumulation, expansion, and then retracement from where the market was, or expansion, manipulation, and then distribution. Yeah, now after the Asian accumulation and the market manipulated by taking this buy side liquidity there, whatever I was looking at in the 1 minute, was a change of character so that I can be able to capitalize on that particular trade. Yeah, now this particular trade here. Yeah, now after the market took the buy side, whatever I was looking for was a change of character so that I can be interested to now target the Asian lows. Yeah, now after the market came all the way, I was constantly marking the last areas of this market, and for this case we have it at this area here. Yeah, now after the market broke below those areas there, now I was willing to take this trade after the market came, for example, to mitigate these areas of inefficiency, because already the market is giving us early intentions from the 1 minute that we are about to reverse. Yeah, because we have already taken the buy side, which was at that area there. The market has taken the Asian highs. Now we are looking to take the Asian lows, or now the distribution, because we have had an accumulation phase from the Asian ranges, we have had a manipulation, now we want to cut the distribution. Yeah, after now that change of character there, the market failed to come and mitigate this block, which I was willing to take the trade from that area there with my stop above this area here. Because where is my stop? Based on that area there, because if the market comes and takes this stop loss, that area there, it means now this model that I was analyzing here, these activities I was looking to participate on this GBP USD at this particular area have been violated, because now the market is about to continue making higher highs and higher lows. Yeah, now after the market came to those areas there, remember our target is at the Asian lows here. Now that is where we targeted, and the market came to those areas there. Let me now go to the 5 minutes. I think we can see it clear from those areas there. Afterwards, whatever you can see there, the market came all the way, and finally we had it taking this Asian lows, and we had a period where the market was consolidating at that area there, and it is on New York where we see now the market again after taking the low of Asia liquidity, now targeting to continue breaking structure and moving up, as we have seen the general trend of this particular asset or this GBP/USD was bullish. Yeah, now that is it all for this week. Where we see this market is pushing to, we have this supply. The same way, whatever we saw on Nasdaq is whatever we have here on this GBP. Now the market came all the way to those massive supply. Remember, on to have a valid supply in the market has to sweep the liquidity of the previous candlestick, and then we have candles here which are unmitigated in the market. That is why I was willing to take that trade if the market came and filled that fair value gap, so that I can minimize my stop loss and have a better risk to reward ratio in this particular market. Yeah, now the market is in this supply here, and because this supply, the market has used it to take the Asian low liquidity, we want to see where when the market is going to open on Monday. If we break above it, then we'll be waiting for a retest, and then we continue all the way upwards. Yeah, now it is simply as that the market comes to demand and target supply, yeah, or taking the Asian highs and taking the Asian lows. Yeah, by knowing the basic market structure of how the market makes higher highs and higher lows, and when you know your key areas in the market, for example, this is my strong area of support and resistance, or you know where the target of liquidity is lying, because how the market usually moves in 4 ways: targeting liquidity, generating liquidity, filling areas of the inefficiency in the market, and balancing the equilibrium in the market. Yeah, now that is where we are going to end this video of the Heistfx price action plus time-based trading. So if you've gotten value from this video, don't forget to turn on the notification bell, of course, by subscribing and showing the Heistfx Academy or the Heist community some love by keeping it simple, nice and easy, and let us grow together, the Heist Masters. So if you've gotten sense in this video, or if you've gotten any knowledge from this video, don't forget to also comment and like and share, so that our videos can reach many of the Heist Masters who want to also get this knowledge that we usually enjoy under the Heistfx Academy. So until next time, panditing, peace out.
One trade. Hey!
I'ma do shit my way.
One shot.
So you can go kick rocks. I'ma stack bricks up, build what I want to make.
Hey!